ladies and gentlemen, this is Alex, Senior Account Executive at GDMFX with the European Session Outlook. We'll start with the North American markets. We had the GDP Index for the second quarter, 0.1% better than expected at 2.3%. GDP annualized as expected at 1.1%. The goods trade balance, $3.3 billion better than expected at negative 59 billion. And the PCE prices quarter-on-quarter 0.1% better than expected at 2%, and the core PCE quarter-on-quarter 0.1% better than expected at 1.8%. Janet Yellen had a speech at Jackson Hole. She said that the case for another interest rate hike is strengthening, sending a strong signal the US Central Bank is preparing to increase rates as soon as next month. In light of the continued solid performance of the labor market and our outlook for economic activity and inflation, I believe the case for an increase in the federal funds rate has strengthened in recent months. This was a quote from her. This is a more explicit statement about the near-term path of interest rates that many Fed experts had expected. Yellen said that the Fed Policy Committee continues to anticipate that gradual increases in the federal funds rate will be appropriate. The Fed Vice Chairman Stanley Fischer said Yellen's comments were consistent with possibly 2 rate hikes this year. Yellen spent the bulk of her speech discussing the potential need to add new tools to the Fed's toolkit to combat the next recession, given that interest rates remain so low. The Fed funds are implying a 36% probability of a September hike. This is the highest implied probability in 3 months. The Dow ended 8 points down, Nasdaq sideways, Dixie went up to 95.45 from 94.65. And the currency pair movements were USD CAD ended 90 pips up, USD Swiss franc 100 pips up, and USD JPY 120 pips up. Today we have some news, some PCE and core PCE price index month on month and year on year. We have personal spending, personal income, and the Dallas Fed Manufacturing Business Index as well. Also, for the week, it's a quite important week. On Thursday, we have ISM Manufacturing PMI and prices paid. And on Friday, the most important event, the NFP and unemployment rate. That should move the markets quite substantially. Onto the EU markets, lending to eurozone firms increased at a faster yearly pace in July than in the previous month. ECB data showed, potentially reducing the need for further monetary stimulus. Consumer confidence in France rose to 97 in August from 96 in July, while economists had expected no improvement. In addition, France's gross domestic product stalled in the second quarter, according to a second print from the statistics agency. The economy expanded by 0.7% in the first quarter. GfK said German consumer sentiment is expected to improve in September, and that could mark short-lived concerns about the impact of Brexit on Europe's largest economy. And onto the UK markets now, where we had the GDP quarter-on-quarter come out on Friday, 0.6%, and the GDP year-on-year, 2.2%. The sterling's upward drive will be tested in the week ahead by data from the manufacturing, construction, mortgages, and the consumer credit. The pound has had its best run since May 2016 in the past 2 weeks. Sterling added 0.7% last week to the 1.2% the week ahead. The UK economy so far is resilient to the effects of the Brexit vote. The FTSE 100 was 12 points down, closed at 67.96 on Friday. And this week ahead, as I mentioned, consumer credit, mortgage approvals, CFK, consumer confidence, market manufacturing PMI, and PMI construction. Onto the Asian and Pacific markets, we had the Bank of Japan Governor Haruhiko Kuroda, who said Saturday that the central bank will take additional monetary easing measures without hesitation to achieve its inflation target. There's ample space for additional easing available, Kuroda said here at the Federal Reserve Bank of Kansas City's annual economic symposium. The Bank of Japan is expected to take action at the central bank's next policy meeting in September. On Tuesday from Japan, we'll have the employment data, overall household spending, and retail trade. And on Wednesday in Japan, we'll have industrial production for July. And this is going to be preliminary data. Economic focus in New Zealand will be on building permits, which had a prior monthly reading of positive 16.3%, followed by the ANZ Business Confidence Index. Given the migration boom in New Zealand and the rise in milk prices, we could see both readings beat the prior readings and continue the trend of positive economic surprises in New Zealand. And in Australia, a steady stream of activity data will feed speculation about the Bank of Australia's policy trajectory. Building permits, retail sales, and capex numbers are all due this week. And in commodities, the Baker Hughes oil rig count remained the same at 406. Oil prices were choppy during and after Yellen's speech. A key driver for the oil markets in the coming weeks would be any new rhetoric from the members of the OPEC, who are slated to have an informal meeting next month to discuss the oil markets. And gold ended flat with having a big range on Friday's trade. During and after the speech, we'll be looking at the NFP data at the end of the week for any major movements on gold. And that was all. Thank you, and I'll see you next time. Goodbye.